All right, hold on, guys. There we go. All right, hey, everyone, welcome. Thank you for joining me for the June monthly student meeting. And you may be saying June, but it's July. I know. I never had a chance to do one in June. So I'm doing the June meeting here in the first week of July, which means this month, in the fourth week of July, I will be doing another meeting. My goal is to do a student meeting per month. Now I'm streaming this on YouTube, and I also have the meeting, the platform here. So there's two ways to be involved. I stream these because I want people to get an idea of what takes place at these student meetings. Also, the whole goal of the student meeting is to help support my free trial users and my subscribers of the Trade Scanner Pro on TradingView. So I want people to be able to use the tool effectively, and this is your chance to get some quality training and ask questions and make sure that you understand how to use the tool most effectively. Now, the title of today's stream is what's it called here? 5 steps to better signals. What that means is I'm going to show you 5 steps that you can employ today to identify and participate in higher probability signals using the Trade Scanner Pro script. If you don't have Trade Scanner Pro, you're probably not going to get a whole lot out of this session. But that's what the point of this session. All right, so let me get started here. Let me just put this slide up. Just give me a second. By the way, if I say and okay too many times, please let me know, because I'm trying to be very careful about that. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, we are on the top of a holiday here. Hey guys, no, Van, I'm not going over stuff like that. The whole purpose of this session is to talk about how to use the Trade Scanner Pro and how to use these 5 steps to get better results. Because again, one of the reasons why I'm doing this is some of the feedback that I get from beginners and novices is that they take these signals and they get stopped out too many times. Well, it's because you're taking random signals. And I want to show people how to minimize that and to get the most out of using the tool. Keep in mind, this is one of the very few tools that has potential to pay for itself. And I want people to be able to accomplish that and build their confidence over time. Now, before I get into the 5 steps, I just want to mention a couple of things here. First, there are links in the description. If you would like to subscribe to the Trade Scanner Pro and try it out for 14 days for free, there's a link. Also, if you want to subscribe to some other things, like we have the free signals trade of the week that comes out each week, which is the same concept as the Trade Scanner Pro, except it's more limited in scope as far as what it looks at. It sends out a coin, a Forex pair, and a stock. It rotates each week. So each week it's a new asset class. It sends out one signal by email. And it's a good way to get a sense of how the system works. Now, if you would like to join our Discord community, there's a link there as well. There's a free channel that Alex handles. He moderates it very well. A lot of interesting things going through there. So I encourage you to check that out. It's free. And if you want to participate in some of these other products, like if you want to subscribe to TradingView, you can save $15. Now that's an affiliate link. And when you subscribe to something like that, Stian over here gets a small cut of your payment or whatever. And it helps him support the community more effectively because he puts a lot of time and effort into this. And it would be nice to show him some appreciation that way. So if you're going to subscribe to TradingView, you might as well do it through that affiliate link. Also, if you want to try out Bybit or MEXC because you're interested in trying out another exchange or something like that, this is for non-US subscribers. You can consider that as well. And Stian gets a small cut of your commission when you fund an account and place trades. And if you want to just tip Stian outright because you really appreciate the work he does, or if you just want to generally support the community, there are some links there for Polygon and Ethereum, not links, wallet addresses that you can use to tip Stian. And again, it goes a long way into helping him provide all of the great technology that he provides. In fact, he has an update coming where he rearranged the settings panel, right? And we'll talk all about that here in a moment. So those are the quick announcements. Hey guys, we got Isaac, we got Kai. Good to see you guys. Dijon. All right, cool. Good to see you guys. Monica, Van. All right, and Stian. So let's now get into the point of the session here, right? Again, we have about an hour, and what I want to do is I want to talk about some theory, some concepts, right? We're going to go through the 5 steps, and then we're going to see if we can apply them and find a trade. Of course, there's a trade going on right now. There's a signal, but we're going to talk about getting to that point and what you should do before the signal appears, right? That's the whole point. So first thing I have to mention is when people come into this game, people come in typically into this game for the wrong reasons. And we all come here for the same reasons, right? We all want to make money, and that's usually a function of greed. So greed pretty much invites you into the game. But over time, the game will separate people that are truly passionate about the game from the wannabes. Wannabes are just here. They want to make some money. They want to drive their Ferrari. They want to have hot girlfriends. They want to have a nice house. They only think of the glamour. Where someone who's passionate about the markets is passionate about the market. They want to understand how the market works. They like the challenge of trying to beat the market each day, which is almost impossible to do. And the result of doing that well is profit. Okay. But the reason why I'm mentioning this, you have to love the market and you have to love the idea of the challenge of the market, is because this game is very similar to the starving artist idea. You all know the starving artist, someone who's a musician or something like that. And before he was famous, he had no house and he had no food and this and that and whatever. And then at some point he gets found out, he builds a following, and now he's wealthy and famous and glamorous and all that, right? Well, here's the thing. So in the music business, you have those wannabes that get into music because they want to be that famous, rich and famous guy, right? They're only interested in the glamour. They're not really interested in the music. And then you have musicians or music producers that are really into producing music. They like to produce something because of the creative process and something that makes them happy. They don't care if they get paid or not. That's someone who truly is passionate about music. I find from some of the people that I like to listen to that they've been in the game at least 10 years before they actually start to get traction and can consider themselves professional because they're getting paid for their music. 10 years. Imagine trying to make music for 10 years. You better like what you're doing. Otherwise, you're going to give up and you're going to go do something else, like sell shoes, right? So this game is very similar. Please understand that. You have to like the game for the game, because it's going to take some time before you're going to see significant profit, if you can get there. I've been in this game for over 2 decades. And let me tell you, I spent at least 15 years in that starving artist mode, just to let you know. All right. So just wanted to run that little speech by you. Yeah. Rented Ferrari. That's right, Stian. Most of the time they're rented Ferraris. Right? That's the wannabe. Anyway. All right. So that's my little rant about being passionate about the markets. If you're a true student of the markets, you want to learn how markets work on an intimate level, and you enjoy the process of beating the market, not the money. All right. So decide what kind of person you are. If you're the wannabe type, please don't waste your time. Go sell shoes. All right. Next, let's get into today's topic, which is the 5 steps. Okay. Now, again, from feedback that I've gathered from users of the Trade Scanner Pro, they tell me that they take some trades, they take a bunch of trades, they get stopped out a bunch of times, and then they cancel after like 2 days. And I'm like, all right, man, sorry, man, you're a wannabe. Like, I don't say that to them, but they're essentially a wannabe. They haven't even given the tool a chance. You need to paper trade this thing at least a week. When I see a cancellation after a day or 2, I'm like, you know what? Good. I don't want this type of customer anyway, because they're just gonna, they're just gonna get nowhere anyway. They're gonna waste everyone's time. So I want to give you a framework that you can use to avoid being that guy. All right, so let's get started. I'm going to make my chart bigger here. And we're going to talk about this step by step. So first thing I'm going to do is I'm going to make this chart bigger. We don't need to see the smaller chart yet. Okay, the second thing I'm going to do is I'm going to change this chart. Interesting move today, by the way. I'm going to put Bitcoin perp up here. Bitcoin perp. Okay, hold on a second. Let me just see if I'm typing this right. Okay, so Bitcoin perp, and we're going to pick MEXC. All right, MEXC, because that's the exchange that I have on my 1 minute chart. And then we're going to change this to an hourly chart. Now, before I continue, first let me explain to you how the TradeScanner Pro works. For those of you who don't know, maybe you're new here. So there are 3 steps for the TradeScanner Pro, the process of the TradeScanner Pro itself. It's a trend following momentum reversal system. That is what it is based on. That's the concept. What that means is, first, it looks for a trend. It identifies a trend. It could be bullish or bearish. Then it looks for a retracement or a pullback of that trend. It then begins to examine this section right here, right? So the first step is trend. The second step is pullback. Once it identifies certain criteria about the momentum of that pullback, it looks for a confirmation, which typically looks like this. When all of that criteria is met, the next thing that it will do is it will send out order suggestions that typically look like this. So you start out with the stop loss over here, then you have the entry price over here typically, and then you have the take profit, which is usually over here. Now, you'll say, well, why doesn't it call it over here? Because it needs confirmation in order to call the signal. And the idea is that if the trend is truly bullish, it's going to at least attempt to take out the high and possibly make a higher high, because a trend is typically higher lows and higher highs, a bullish trend. A bearish trend is lower highs and lower lows. So it's looking to capitalize on that concept. Now, one thing that makes the TradeScanner Pro unique and makes it more advanced than the TradeScanner bot, which only sends out email signals, is TradeScanner Pro has something called counter trend mode. Counter trend mode looks for the momentum change here, which is against the trend. So it forgets about the trend and it says there's a momentum change right there. And it will then print a signal. It'll draw the order suggestions. That is very important for certain types of trades. Now, when you're dealing with the TradeScanner Pro, there are 3 types of trades. There are reversal trades, there are continuation trades, and then there are random trades. So you want to be familiar with all 3 types. Now, what is a random trade? A random trade can appear anywhere. A random trade can be a reversal or a continuation pattern, and it can appear anywhere for any reason, anytime. Now, are those good to trade? Well, a lot of times they turn out to be losing trades, but they may not be losing trades. What makes them random is a signal goes off for no rhyme or reason, and it may go to the take profit, it may not. When you want to take those type of signals, it's best to take them in a very busy, a very high volume, momentum filled environment, which we do not have right now. This is a slow period. Okay, we're in the middle of the summer, and volume is going to decline even further. It's seasonal volume. Weeks 3 and 4 in August are typically the worst, right? So if you're going to take time off from the market, those are usually the best weeks to take off. Volume does not return back to normal until the 2nd week of October, typically. That's seasonal volume. Now, that's a piece of context that I don't expect beginners to know, but I'm telling you, it's important because it's going to affect your performance, particularly when you're dealing with random signals. Because lack of momentum means the lack of the follow-through is going to be harder to come by. Okay. Now, so I just explained to you how the TradeScanner Pro works, and we talked about some context there. Now, let's get into how to use it. For those of you, again, that are new to this thing, again, the key purpose of the TradeScanner Pro is not to forecast the future. It is not a forecasting tool. It is a confirmation tool, which means it needs information, it needs criteria to confirm. It doesn't forecast the future. It's not a magic money machine like a lot of these beginners think it is. It's not. Monica says, I was for many years learning is still more fun. Wow. Imagine selling shoes. Yeah. I don't know anything about selling shoes, Monica, but I can only imagine. I guess it depends on what kind of shoes. But anyway, so the Trade Scanner Pro is a confirmation tool. Now, confirmation is probably the hardest part of this game because it requires so many things that you have to consider while things are always changing. So the Trade Scanner Pro takes that all of that off of your hands, and you don't have to struggle with that anymore. But there is still some work you have to do. So here we go. I'm going to show you what you have to do to use it effectively. Now, you don't have to have years of experience to do this. A couple of months is adequate if you listen to what I'm saying and you follow this step by step. Before you use the Trade Scanner Pro, you want to repeat this process exactly the same way every time. No nonsense about Bitcoin dominance, no nonsense about fundamental this and this project that. That's all irrelevant to the market. The whole point of the market. See, let me touch on market information real quick, because this is another big problem with beginners. Beginners are very caught up in nonsense, and it's no wonder. There's a lot of nonsense put in front of us all the time. You have to understand something. In this game of public information, 99.9% of the information that we consume is completely irrelevant to what is actually happening in the market. The best information is the information that the market itself can give you. Now, people say, oh, what's that? I tell people what it is all the time. Trend and support and resistance levels. That is the best information. As soon as I tell them, oh, that's not, they get bored. They don't want to hear it. They thought I was going to give them some kind of magical math formula that was going to print money for them, right? But less is more in this game simply because the majority of information that we consume is worthless. Why would we want more of that? We want less of it. Now, if you had Nancy Pelosi information, then sure, more is better. But you have to understand where we are in the hierarchy. As retail traders, we are at the absolute bottom. All we do is make others rich. That is what we do. That is our purpose, whether we like to realize that or not. All these dreams that these people sell you about getting rich and all that stuff, it's nonsense. The market is there to take the wealth from the misinformed and transfer it to the informed, right? Or like I said, material knowledge. People who think they have material knowledge transfer their money to people who have material knowledge. Inside information is a form of material knowledge. We don't have that. And if we had that and we trade on it, we go to jail, at least in the stock market. Okay, so I just want to mention that. If you're one of these people that gets all obsessed with this nonsense, like fundamentals are the same thing. Unless you work for the company and you actually know what's really going on, public information is not going to help you that much because everyone has access to it. To win in this game, you have to have information that other people don't have. And you may say, well, support and resistance and trend, everyone has that. Yeah, but most people overlook it or they don't understand the relevance of it, especially as it changes. So that can be material information if you understand how to use it properly, especially since most people overlook it. Okay, so hey, Giovanni. All right, cool. Good to see you guys. So all right, so that's my rant on information. Let's get into the Trade Scanner Pro situation, shall we? So step one, here's what I'm going to do. I'm going to type it in here, right? So step one is first, we have to decide what type of trade we are getting into, okay? So either it's going to be a what? You guys tell me, what two types of trades should we be thinking about? This is before you even look at a chart. Realize, before you even turn your computer on, the first step to using the Trade Scanner Pro is you must decide what type of trade you're going to be looking for before you even see anything. Giovanni, that's a good try, but that's not the answer I'm looking for. There are two types. I talk about the trade categories all the time. Anyone else want to answer that question? That's why this session here will be very valuable for you. Short, what does he say? Short and, hold on. Van, no, that's incorrect. Of course, Steen got it. Steen is correct. Well, Steen's a longtime student. So, yes, Steen, it's swing trade or day trade. Those are the only two options. This is step one. If you're not doing this right from the start, you're doing this incorrectly. So, day trade, you're either a day trader or swing trader. Okay? That is step one. You must choose that before you do anything else, because that right there is going to shape your thought process going forward for the entire process from here on. As a day trader, you're going to be looking at things one way. As a swing trader, you're going to be looking at things another way, okay, relative to trend and levels. So that's step one. Are we clear? Very simple. You're either going to go in as a day trade or as a swing trade. And it doesn't matter. It could be the same every time. Maybe you're only interested in swing trades. So you say, okay, that's it, swing trade. So you know off the bat, that's why you're going to go in. But the mistake is you go in and you just feel it out. And you say, oh, okay, I feel like doing a day trade right now because I see this action here. Then you're reacting to the market. That's incorrect. You want to go into the market with an idea, a purpose that's predetermined. So you begin with day trade or swing trade. Okay, cool. That's step one. Now let's talk about step two. Step two is what? Let me type it in. Step two. Step two is where we uncover context. All right, so we're going to call it context. So this is where we gather market information. And that information is going to help shape our decisions going into the next few steps, right? So for purposes of this example, I'm going to start with my step one. Of course, you guys know, day trade, all right? And so day trade means that my time frames that I choose are going to be predetermined. So as a day trader, I want to have on any time frame for anything where you use TradeScanner Pro, you want two time frames. You want a larger time frame and you want a smaller time frame. I got ahead of myself there. I forgot to mention something. You want a larger time frame and a smaller time frame. So if I select day trade, then my larger time frame should be an hourly chart, which is what this is, and my smaller time frame can be a 1 minute chart. It doesn't have to be those two specific time frames, but it needs to be something similar. Like maybe as a day trader, you want to work on a 3 minute chart on your small time frame, but your large time frame can be a 30-minute chart. It could be a 4-hour chart. It has to be larger than your smaller time frame, obviously. The smaller time frame is what you're actually going to use to manage your risk. The larger time frame is what you're going to use to uncover context. And that's step two. Okay, so let's go to our larger time frame. In my case here, I chose day trade. My step one is day trade. My step two, right? Now I'm going to uncover context off of my hourly chart, because as a day trader, I'm looking at a 1 minute and a 1 hour. So I'm on my 1 hour. You guys see that? And on my 1 hour chart, let me just turn on my trade scanner here. Okay, my 1 hour chart, we can see the trend is bearish. The trade scanner is telling me that, but I don't need the trade scanner to tell me that. This lower highs, lower lows, all over the place over here. I can pretty much determine on my own that the 1 hour trend at the moment is bearish. This momentum is bearish. So that's important when it comes to my 1 minute, right? So that's my trend. That's my trend piece of context. Now, the other thing is support and resistance levels. Again, this doesn't take long to learn. Support and resistance levels, you're looking for inflection points on the chart where there were significant reactions. Now, for something like this, you can go further out. You don't have to look at just the recent few hours. You can go back like a week or whatever, right? You can basically zoom out of your chart, something like this, because when you do that, you can see inflection points. That's an inflection point, would you say? This is one right over here. This is a relative area. These are inflection points up here, right? Inflection points are basically turning points. The market shows a pretty significant turn, right? Those are where we can reference our levels. So we could say we have support here. We can say we have a support right around here where we are right now. We can say we have a resistance here. We can say we have a resistance here. Now, those are our levels. That's it. It took me 2 minutes to do that. Doesn't take long to learn this. Now, the reason why this carries any relevance is because there's an important concept in the market called history repeats itself. And it doesn't repeat itself exactly because we don't know what type of magnitude it's going to repeat itself in. But what we're actually tracking or what we're measuring is the repetition of human behavior. That's what it's repeating. So in this case, people bought in this area. People bought in this area again. Okay. People are attempting to buy here. History is repeating itself because people repeat their behavior. Fear and greed have repetitive patterns. People react the same way every time when they're faced with these types of stimulus or stimuli, if you want to call it that. Make sense? So that's what we're actually measuring, or that's what we're looking for. So we have our levels. This is it. You don't need any fancy oscillators. You don't need the RSI. You don't need to know Bitcoin dominance. You don't need to know any of that nonsense. It does not help here. We have trend, we have levels. This is the most valuable information you can use to make decisions, especially on smaller time frames. Now, keep in mind, if you're just tuning in and you're like, well, but I'm an investor, this stuff is not going to be, you can apply these concepts to larger time frames, but there are going to be some other considerations as well when you're dealing with larger time frames, because position sizing and risk are a big factor when you're dealing with larger time frames. Of course, the same with smaller time frames, but smaller time frames, in theory, you're taking less risk and things are much more tight and controlled. And you also spend a lot less time in the market when you're dealing with smaller time frames, which is a way of controlling risk. The more time you're in the market, the more risk you're taking. Some surprise news can come out of nowhere and change things very quickly, right? Like this Bitcoin situation, right? Keep in mind, just a few days ago, right, everyone was throwing a party, and was anyone calling for this? I don't know. No one can see this coming. There's no way to know the future. So all you people that maybe you're new, you're tuning in, and you think, well, I just need to learn how to forecast the future. There's no such thing. The market does what it wants to do based on how information reaches the market and what information reaches the market when. The only way you will know the future is if you know information before it reaches the market, right? So if you're friends with Chairman Powell and he tells you that he's going to cut interest rates next week, you know something the market doesn't know, and you know the future. If you're not friends with Chairman Powell, or he doesn't tell you because he doesn't like you and he doesn't tell you what he's going to do, then you don't know the future. You're in the same boat as everyone else. So I tell you this because when people claim that they have this accurate forecasting system and nonsense, it's all nonsense. Stop believing it. Stop consuming financial pizza. All right. I'm in a rant mood today, right? Okay, so we have step 1 and step 2 complete. We know our trend, we know our levels on the bigger picture. Now, once I have this part complete, I can use this context to basically do what? Anyone want to chime in? So I know I'm looking for day trades, and I've just determined my levels, and I've just determined a few things here. I know my trend. So now I have to decide what? What do I have to decide? Who wants to answer that question? Anyone want to? Steen says, look for trend or counter. Very good, Steen. Steen's been, like I said, he's a long time student. He knows all the answers, and it's okay. I usually yell at him and say, don't answer, let other people answer, but no one else answers, so it's okay. Steen can answer. Yes. So once we have this information, we can now decide. Step 3. Let me write it here. Step 3 is we determine if we want to choose trend or counter trend mode for the script, right? So step 3, trend or counter trend mode. This is very important for TradeScanner Pro. So you realize what we're doing here is we're shaping a purpose. We're shaping something to anticipate. We're not reacting. Our decisions are being shaped by the market information. So we now, at this point, step 3, because we have our context, that step is done. So now we have to decide, are we going to look for continuation trades. Like I said earlier, there are 3 types, or we're looking for reversals. So TradeScanner Pro by default is in trend mode, which means the trend is bearish. This thing is looking for shorts. That's what it's looking for. But we have to decide, do we want to do that? Or do we want to look for longs? So going back to our context, what do you think we should do here? Let's see what you guys have to say. And then I'll chime in on what I'm going to do. So this is what you have. So at this point, Van, and this is where you have to make this choice. Are we interested in trend? Because we have a bigger picture in front of us, and we're going to be working on the smaller picture. So what do we decide here? Guys, think about this for a moment. And then I'll talk about the control panel over here. Giovanni says longs. Well, why? Giovanni says long. Van says continuation. Giovanni said longs. So why don't you guys explain yourself real quick? What do you mean? Why? Why longs? And why continuation? Because I have to choose one. Remember, you guys, when you guys are using the TradeScanner Pro, these are the steps you're going to go through, right? So this is step 3. Of course, we spend a lot of time, but you should be able to go through these steps very quickly. Wait for confirmation or zoom out for bigger picture time frame. Support zone. Okay, no, so Van says support. Yes, Monica, I'm not sure where you were going with that. Kai says longs because we are at support. Yes, in lower part of the range. Demand zone, yes. So Stian says counter trend. Stian is a step ahead. So if we're going to, if we've determined that we are at support, which we are, then a higher probability signal is likely to be a long, right? But this trend is bearish on this time frame. So in order to get a long, what do I have to do? Now, if you notice, I switched over to my 1-minute chart. Because what is the trend on my 1-minute chart? It's bullish. My trend on my 1-hour chart is bearish. Which chart am I taking the trade on? The 1-hour chart or the 1-minute chart? I should know this before I do anything else. How would you guys answer that? So we've determined that I want to look for longs. So this is where I'm going to switch my mode, right? I'm either going to look for a continuation or I'm going to look for a reversal. I'm interested in longs. How do I get a reversal, or how do I get that? So guys, 1 minute. So Giovanni says 1 minute. Okay, right. I'm taking trades on my 1 minute. My 1 minute says bullish. So what does that mean as far as my trend mode? Should I be in counter trend mode here, or should I be in trend mode? What mode should I be in? This is all step 3, guys and girl. This is all step 3. What mode should I be in? Because again, this all goes back to TradeScanner Pro. What mode should I be in? I have to choose a mode. No trend mode. Trend. Giovanni says trend. Yeah, because look, the trend on the 1 minute is bullish. What I'm trying to do is I'm trying to work on the probability of the larger time frame, which is my hourly chart. We've determined that this area is a support level. I should be looking for longs here, but my trend on my hourly chart is bearish, right? Which makes sense on a pullback. But my trend on my minute chart is bullish. So if I want longs, and I'm working on a 1 minute chart, because we determined we want longs from the hourly chart. If I want longs on my 1 minute chart, I should be in trend mode. I don't need to be in counter trend mode because we're not bearish on the 1 minute. That is how you use counter trend mode, when you're aligning with the bigger picture, right? Bigger picture level, but smaller picture, we adjust based on what kind of trend we have on the smaller picture. In this case, the trend has turned to bullish for us. So we want longs, then we're going to be looking for longs here. I don't need to change anything. Do you see that? Do you see how that works? Again, I'm sure this is probably very valuable for beginners, because I doubt beginners go through this process that I'm showing you here. So we've determined that we want longs. So far our purpose is, we're a day trader. we found our levels, and we're looking for longs. And I need to change my mode or not change my mode. So that brings me to the control panel here, the settings panel. Now, if you notice here, this I updated this thing, Steen. We have the trailing stop tightness. He's going to change the labels, but this changes the speed of the trailing stop. That's for advanced users. If you're a beginner, don't worry about that right now. So I'm not going to say much about it. Then you have this over here, which is the show previous trades. And this can be helpful when you want to replay trades and things like that. It shows the historical trades on the chart. Okay, I could turn that on and off and you'll see them go on and off, right? Then you have heads up. Heads up, what that does is it draws orange candles on the chart. And the orange candles are a heads up or a warning that a signal is likely to appear in the next 3 to 5 bars. So understand, on a 1 minute chart, if I get heads up, that means in the next 3 to 5 minutes, a signal is likely to appear on my 1 minute. But if I'm working on a 1 hour chart and I see a heads up, that means in the next 3 to 5 hours, a signal is likely to appear on that time frame. Okay, makes sense? So that's what heads up is. It's very valuable because it can also help cue you into getting into trades early, which is very aggressive. I don't recommend that for beginners, but I've shown many examples in my YouTube streams and my Monday streams where I do that, and sometimes it works out really well. So that really helps when you have a lot of conviction and you're at a particular level and you're looking for certain types of stuff. The advantage of doing something like that is when you lose, right? If you get in early and it's a losing trade, you lose on one contract. But if you get in early and then you get the signal after and then you add to it and it works out, you win on 2 contracts. That's what puts your reward risk ratio dramatically in your favor. Now, trailing stop, that should be obvious. Okay, you want to, it's by default it's turned off, but you should turn it on because a trailing stop is always reducing your risk, and that is the factor that keeps you in your winners longer. Then you have counter trend or trend mode. See that? See when I switch that? Look at all those counter trend trades. Tons of them. Look at that. Look at all these trades all over the place. So counter trend means the signal at the time was the opposite of the trend on this time frame. Look at these green examples here. At this time, the trend on this time frame was bearish. So that is where we would have turned on counter trend mode based on our 1 hour chart. Do you see that? Does that make sense, you guys? Give me a yes or no. That's a very important point. This would have been, we would have used counter trend mode to look for these because the trend at the time was bearish on this time frame. But the trend has turned bullish. So we don't need counter trend anymore. There was actually a counter trend trade that just appeared just now. You see that? I turned it off. So since our trend is now bullish, we're aligned with the bigger picture. I don't have to be in counter trend mode. Now here's the thing. So we've determined that we want a bigger picture counter trend. That's what we want. We want a bigger picture bullish reversal, and we're trying to play that on our smaller time frame. By the way, the advantage to playing it on a smaller time frame, like a 1 minute, is you're taking a much more reduced risk in terms of magnitude. If you take a trade on a 1 minute chart based on market risk, your stop is going to be wider, a lot wider than it will be on a 1 minute chart. But of course, your reward will be greater. But the thing is, your risk is going to be greater. Does that make sense? So for example, on a 1 hour chart, your risk may be 300 points and your take profit will be like 450 or something like that, right? On a 1 minute chart, your risk will be like 100 points and your take profit will be 150. You see the contrast in magnitude? That's very important. Now, so we're working on the 1 minute and there's nothing to do here. As you see, I have no signals. Do I even have a heads up? Do I have anything? I have nothing, nothing at all. Okay. So when you're faced with this situation, I'm on a 1 minute, there's nothing to do, right? We've determined we want to be in trend mode in this situation based on all the steps before this, right? But I said there are 5 steps to this process. What do you think step 4 is? You guys could say, I don't know. This is kind of a trick question. What do you think step 4 is? So step 1 was we decide if we want to be a day trader or a swing trader every time. Step 2, we uncover context. We find our levels, we find our trend. Step 3, we shift into trend mode or counter trend mode based on the information from step 2, right? So we've gotten that far. What's step 4? You guys tell me. What is step 4? You guys could say, I don't know. This is a tricky one. What do you think step 4 is? Shift into a longer time frame. Segi, good answer, but that's not what I'm looking for. Nope. Good tries, though. I appreciate you trying. Nima says confirmation. No. Well, okay, Nima, you're close. You're very close. But how do we look for confirmation in this way? What's confirmation? See, look, you guys are jumping around time frames. This is why I ask you guys. I want to see where you guys are. Nima is very close. No, look at Nima's answer. Nima says confirmation. How do we find confirmation? Steen got it. You wait for a signal. Very simple. Wait for. Step 4 is wait for signal. That is confirmation. Like I said earlier, the TradeScanner Pro is a confirmation tool. It takes all of that. Look at how you guys were jumping around all over the place, changing time frames, looking for other things. Look at that. You're grasping for information that's going to confuse you. Wait for the signal. It's very simple. You don't have to think. You don't have to do anything. You've determined what you want to do. We know we're looking for longs. We have our location, right? We believe that long is going to be the higher probability setup based on the context we uncovered. We switched our mode to the appropriate mode so that we can get a long signal. And step 4, we simply wait for the signal. I think Monica's joking with us now. Is that clear? Is that clear? Does that make sense? So TradeScanner Pro users, right? So right now you have 4 steps that are going to help you find better trades or higher probability trades because you're going in with a purpose. You're going with a goal. You're not reacting to what you see. The whole point of the TradeScanner Pro is to confirm a signal. So wait for signal, right? Oh, cool. We're pulling back. Maybe we'll get a signal soon. Now, that's step 4. We're going to wait for the signal. And what I was going to say is when we were waiting for a signal, this is a nice little pullback. What time is it? Okay. Usually this kind of thing happens at 4 o'clock. We're waiting for a signal. Sometimes, especially when you're on a small time frame, like you get these movements here and you see there have been no signals since this one right here. It's been quite some time on a 1-minute chart. People get impatient. What is something I can do to find a signal when I don't see one here, like on a 1 minute? Now, this is a little more advanced. And here's a hint. It's going to require the premium version of TradingView to do it. What do I have to do to find a signal? The concept is important, though, because as a swing trader, you can also employ something like this without having to have the most expensive version of TradingView. So what would you guys say? How do I find a signal if there's no signal on my 1 minute? What can I do? Look at the smaller time frame. Van, correct. In this case, I'm on a 1 minute. So you have to have the full version of TradingView to look below 1 minute. But in this case, if I go like I'm waiting, there's no signals. Like, man, let me check a smaller time frame. This is the only time you would do something like this. So I'll go to a 15-second. Look at this. There was a signal. There was a signal, that little bullish movement before it gave it all back. As you can see, the smaller you go, it doesn't mean that it's going to be higher quality. In fact, smaller time frames, the sub 1 minutes, are very, very random and unreliable. So you have to keep that in mind. It doesn't mean you can't make money with them, but you have to understand what you're dealing with. You have to understand the limitations or the risks of what you're dealing with. I don't recommend sub 1 minute for beginners. Now, so good answer. You guys got it. Now keep in mind, what if you were working on a swing trade time frame? What if you were working on a 4-hour as your work time, your trade time frame, and a daily as your context time frame? What if you were in that situation? and you're waiting on your 4-hour and you're waiting and you see kind of a move developing, but there's no signal. You can check a 1-hour. There may be a signal. There was an example where Bitcoin bounced off of 56K not too long ago, and it went to like 64K or whatever it was. There was a warning on the 4-hour. There was a heads up, but the signal appeared on the 1-hour. So you may get a heads up on the 4-hour and be like, no signal, but you see it turning. Check your 1-hour. You can go a time frame lower if you're looking for a signal. Does that make sense? Trend is bearish now. Good observation, Isaac. So the trend on your 1 minute, this trend is going to change a lot. Turn to bearish. So if I want bullish trades, Isaac just told me what to do, and he's correct. You better switch to counter trend mode. And look at this. We got some warning. Cool. Good thing you told me that, Isaac. So I got some warning. I'm going to be aggressive here. Okay. What do you think I'm going to do? I'm going to buy one contract on the warning. Now, again, that's extremely aggressive, and I don't recommend that for beginners. But I'm doing that because I want to see if I can build a position at better prices before the signal appears. Now, so we went through steps 1 and 4, okay? And you guys pretty much got it. What do you think step 5 is? I don't expect you guys to know this one, but I want to see some guesses. Because the title of the stream today is 5 steps to better signals. What do you think step 5 is? I'm very curious to see what people have to say. Be serious. Tell me what you guys think. What do you think step 5 is? Because once we have this here, we waited for the actually I haven't waited for the signal. I got in early. So we haven't completed step 4, but the warning tells us a signal is coming very soon. Van, wow, I'm impressed. Respect TSCP. So what does TSCP mean? Does that mean respect? Well, no, Kai, the trade scanner does that for us. We don't have to do that. Van got the answer, but what does TCP mean? Respect trailing stop. Trade scanner. Okay. Step 5 is respect your stops or manage the trade, right? So we can call this respect the stops, because once we're in the trade, right? There's no signal yet, but a signal is coming very soon because I got the heads up, right? So when the signal appears, that's step 4. So once I'm officially in the trade, because I'm not officially in the trade yet. After this candle close, we'll probably get the signal. Once I'm officially in the trade, no signal. Okay, maybe the next candle. There should have been a signal there, but all right. Sometimes it doesn't meet the full criteria, so sometimes the signal doesn't appear. But there should be one coming up soon. We'll wait another candle. But once I'm in the trade, I have to manage the trade. So while I'm managing the trade, what am I doing? In respect to TradeScanner Pro, I'm respecting the order suggestions, which are mostly stops, right? Stop loss and the trailing stop. I'm respecting the orders. My thinking is done at that point. I don't have to think anymore. The confirmation is in. I just sit back and I let the market take over. Oh, look at that. What time is it? It's not even the 4 o'clock candle. All right, no problem. I'm in early. We hopefully we'll get the signal soon. I'm in early, and we'll see what happens. Again, I'm not in. There's no official signal, so theoretically, I should not be in this. I just like to illustrate some aggressive examples for those of you that might be a little more aggressive. If this trade doesn't work out, I'll bang it out. This is again a 1 minute chart. It's going to look dramatic at times. If I get a second group of warnings, that's typically like a failed low, kind of like this situation here. Right? We had warning here, and then it went lower, and then we had another warning. Those are very high probability. See how it's giving me a warning? Anyway, when I'm in the trade, step 5 is respect the orders. Because like I was just saying, your thinking is done. There's no more thinking. It is now up to the random nature of the market, and you're going to either get stopped out it's going to be a losing trade, or maybe you'll break even, or maybe it'll go to your take profit, or maybe The trailing stop will help you take some degree of profit or possibly go beyond the trailing stop. Those become your options. That's it. There's nothing else to think about at that point. You're no longer thinking anymore. Your thinking was done on step 2 when you gathered when you gathered the context. Right? All your thinking was done in advance. We determined what type of trade we want. First, we figured out we want to be a day trader or a swing trader. Then we found our context. Then we decide trend or counter trend mode based on the information from step 2. Then we wait for our signal. Once we're in, we simply respect the stops. Our thinking is done. That is the value of the TradeScanner Pro, right? The confirmation comes in, you just visually manage the trade. As you get more advanced, you can do things like add and take positions off and stuff like that, but that's beyond the scope of this. I want people to just take these 5 steps and use them so that they can have better outcomes when they use a TradeScanner Pro compared to just taking random signals, which is typically what the beginner does. And I don't want people to do that because I want you to have a good experience. I want this tool to bring value to you. I want it to be able to pay for itself. And you can build confidence. Beginners are unable to realize that a tool like this shaves about a decade of learning curve off of your learning curve, a decade of time. That's how much experience is baked into, well, actually, you could say 25 years is baked into the TradeScanner Pro. But to get to the point where the raw sections, like the raw information that the TradeScanner Pro uses, to get to the point of figuring all that out takes at least 10 years, at least, right? Saves you all that. And now you're at least working with confirmation you can rely on. Not only does the TradeScanner Pro give you the order suggestions and simplify your thought process dramatically, it also enables you to take the same trades for the same reasons every single time. Big mistake beginners make is they take trades for a multitude of reasons. You know, some fake guru told them something, they saw something in a chat, the RSI says something, they watch the video, some news comes out, they're reacting to nonsense and they're not taking the same trades. Sometimes it works out, sometimes it doesn't. They can never figure out why they can't make money over time. You have to take the same trades for the same reasons every single time. It doesn't matter if it's a coin, a Forex pair, or a stock. It does not matter. You can use this for anything that a financial market that trades that has momentum. And Forex, stocks, coins, they have momentum. So you can use this. Make sense? Monica says, how many trades per day would you recommend to take at the beginning? That's a very good question, Monica. It's going to depend on the time frame that you choose. As a swing trader, you're probably going to only have a few trades per week, right? Maybe 3 trades, something like that per week. If you're working on a 15-minute chart, for example, or a 30-minute or something like that. A 5-minute chart, you may have a couple of maybe 2 trades a day or something like that. That's all you're going to get. That's all. You're not going to see a lot of signals, right? That's another complaint I get from beginners. I don't see any signals. What time frame? I'm in a 15-minute, like you told me, and there's no signals. Dude, you got to wait, right? It takes hours for a signal to develop on a 15-minute chart. So on a 1-minute chart, for example, Monica, you know, taking maybe 3 or 4 trades a day is more realistic. 3, 4, 5 trades. You really shouldn't be taking more than that because there's not that many quality opportunities. Assuming you're picking your levels and you're doing it. Now, if you're taking random trades, you may have 10 trades, but you shouldn't be taking random trades. That's the whole idea. If you're going through these 5 steps, like I just showed you, it should really help you skip a lot of signals. There's our signal. All right. So I'm buying my second lot. So I got in early. Right, step 4 is now complete. And now I'm in step 5. Manage the trade, respect the levels, respect the stops. My thinking is over. Okay. Now notice I had some warning. It took some time, like 5 minutes, and I got the signal. Now, keep in mind, on a 1-minute chart, especially this time of day, it's almost 4 o'clock. The price may go straight to the stop. That can happen, especially on a 1-minute chart. But like I said, step 5, there's no thinking here. If it goes to the stop, I bang it out. That's it. And if I get another signal soon after that, I'll consider getting back in, because again, this blue line on the bottom here, that's the support level that we determined from step 2, remember? So we're still fooling around a support level. And there's evidence that people bought here previously. Look at that. So we'll see. If it goes straight to the stop, hey, it happens. Now, I bought one contract early, and now I'm in my second one. This early one was not beneficial, because the whole point of getting in early is to try to get a better price. So in this case, it's costing me more. Okay, and this thing may go straight to the stop. Let's see. Oh, I'm sorry. I said 3 o'clock. I said 4 o'clock. It's not 4 o'clock. It's 3 o'clock. Man, I keep saying 4 o'clock. I don't even know what time of day it is here. No, because usually when I'm streaming, it's usually 4 o'clock. All right, so this may tap me out. I'm gonna follow step 5 and respect it. Okay, and I'll be prepared to get back in. This is what you're going to deal with, even though we're at a high probability level and we got everything aligned the way we wanted and we got the signal. This is going to happen. Now, this can happen a lot. Obviously, it's going to be more frequent on a 1-minute chart. If you're on a 15-minute chart, this process of going straight to the stop is going to take a lot longer, obviously, unless, of course, there's some surprise news and it goes directly to the stop. It can go straight to the stop. If some unexpected news comes out and the thing moves 1,000 points in an instant, it can do that. I'm talking about Bitcoin, right? But in this case, yeah, look, it happens. I'm going to have to blow this out. So there it is. It's out. I'm going to respect it. Get out. So I'm out. And look, as soon as I got out, look at the pin bar. All right, no problem. So this signal right here, as we can see, it's now a historical signal, is a stop out. And I took a stop on 2 contracts because I got one in early. All right, whatever, it's going to happen. Now, I'm not going to be in a hurry to get back in. I'm still waiting for longs because that was our plan earlier. And I'm going to wait for another signal. Oh, that's the wrong button. I'm going to wait for another signal in this area here. We're fooling around right at the support. Okay, so once again, I'm not reacting. I'm preparing for my next trade based on the information that we've uncovered from the first 4 steps. So step 5 is complete. I respected my stop. All right, and I got out and I had to take a losing trade. I'm glad you could see that as a losing trade because that's going to happen and you have to be prepared for that. So if I go back in here to my trade thing, oh, turn that off, my paper trade thing, and I look at my account here, that cost me $146 right there. Okay, it's $146. All right, it happens. This is, by the way, this is not the best time of day to be doing this, but you know, that's why I do it on paper. These kind of things happen. Now, maybe I get another signal or something, but I'm going to wait. In fact, because of that because of the time of day and all that other stuff, look, there's my warning. I'm not going to jump in early. That loss should have been smaller theoretically because I had 2 contracts on and I bought one here. I was being aggressive. That's going to happen. That's why I warn people. Be very careful with that. All right. So this time I'm going to be a little more conservative. Got my little warning candle here. All right. So that's a starting point to at least be okay. Next few candles, a signal may appear. Now here's what I'm going to do to try to make my money back. If I get the signal, I'm going to buy 2 contracts. Instead of putting on one early, I'll just buy 2. But I'm waiting for the signal this time. Okay. Now I'm going to wait because this thing may break. Support and resistance levels, just because there's a level there, doesn't guarantee it's going to hold. The buying activity that occurred there earlier may not occur again. That happens. So history doesn't repeat itself exactly the same way all the time. All we know is there's a higher probability that the buying begins here again. So I'm going to wait and see if that's the case. Now, people that don't have patience or inexperience, they'll be, oh, I could have been short. I could have been making all this money short. This thing sucks. Well, no, we have to go in with a plan first. And we determined that we want to look for longs, which made sense. If we wanted to be short, then we'd have to look for trend continuation. At the time, you know, and at the time we would have to have flipped to counter trend mode to even get that. And after the fact, it's always going to look clear. Oh, I should have done this. Oh, I should have done that. But you can't operate after the fact. You have to look ahead. So what occurred here? That's it. We took our chance on the long side. It failed. It's attempting to break the support. Okay, for whatever reason. Now, Don't go grasping around. What's the news? What's going on? You don't need to know what's going on. Everything that we need to know is right in front of us here. Also, look at this, right? There's a lot of buying activity in this area earlier. So this is still a high probability location for longs. I'm still interested in longs. So making sure I'm in counter trend mode, I'm going to need that to go long. And I'm not reacting to what I see. Some people, what they'll do is they'll see all these red candles and they'll be like, I'm shorting this thing. I'm shorting it. This is the worst possible location to short it. If you were going to be so excited about shorting it, that should have been thought about up here, not here. Again, if you're thinking short, you're reacting to what you see. We have to think ahead. We don't want to think based on this. We want to think of what can happen here, like in this area, right? What can happen in the future? And based on the location, it's more likely to be bought. So let's see. I'm getting my warning. Let's see the next trade. I'm going to try to stay in this to try to get another trade. All right, so good question from Monica. There any other questions? We've been at this now an hour. Some good questions here. So by the way, people, while a signal is going to appear soon, I'll keep track of this. If you want to try out the TradeScanner Pro for 14 days, there's the link in the description. And if you click on that link, it's going to take you to this page I want to show you, but the signal is going to pop up. So I got to wait for the signal. Hold on. Then I'll show you. So this thing, we got 30 seconds. And those are some nice warning candles. I normally would be in by now, but I'm going to be patient, like I said. And notice this is occurring within the support area like we suspected. We should be completely expecting this because we are anticipating. We're not reacting. Now, based on that, I should be seeing a signal either in the next candle or the candle after that. If I don't get it in the next candle, let's see. Do we get it? No signal? All right. I'm going to take one on the warning because I'm very confident with the location. I know it's aggressive, but I want to be in for the signal. It's only one. If it goes the wrong way, it's only one. I'm going to try it again. But again, you should wait for the signal. Now, because I don't want to talk about something else and then miss the whole thing for example purposes here. Maybe the signal comes after the next green candle. We'll see. But that doesn't look good at the moment. But it's a 1 minute. Keep that in mind. Now, if you want to try this thing out for 14 days, this is where I was going. You go to the link in the description, and it will take you to this page, my Market Signals Pro website. It explains to you what the TradeScanner Pro is, tells you about me, and then here you have the 14-day free trial sign up. Please keep in mind, you have 14 days for free. If you wait until day 15 and you don't cancel it, you're going to get billed. It's either going to be $30 a month, which is the monthly price, or you pay $270, which comes to $22.50 a month for the year. It's a pretty good price. And these prices are going to go up. This is preliminary, especially when we add our first extension. So please keep that in mind. You want to lock in good prices. Now's your chance. When you click on this, it will take you to the registration page. And on this page, as you're going to see, you fill out this form. And you have to make sure that you put in your TradingView username right here. Make sure you do that. And then listen carefully. In an hour, give it at least an hour or less, you will get your invite on TradingView automatically. Thanks to Stian, you will get your invite. Okay? Give it at least an hour. Please don't send me 20 emails asking me where the invite is. There's a signal. Ask me where the invite is, and you haven't even given it an hour yet. Okay? So now I'm buying 2 contracts on this signal. So keep in mind, I bought 1. So now I have 3. If this one works out, I should be able to make my money back. If this one doesn't work out, then I'm going to be even more in the hole. But that's because I'm taking these aggressive entries on the beginning, right? But my plan, like I said before, was to buy 2 on the next entry. So let's see what happens here. Now, sometimes what will happen in these situations is you'll get like this little pullback. Keep in mind, this is a 1 minute chart. So these type of, a lot of random and erratic price action can happen on this time frame very easily. It can easily tap you in and tap you out, tap you in, tap you out. It can do that a few times. It's a 1 minute. That's why I don't recommend 1 minutes. I just show this because I want you to see this thing in action. Now, what I was going to say is a lot of times price may like fool around inside of this area and never stop out and go through the entry price a second or third time. You can take that as an opportunity to add another one. Again, that's aggressive and advanced, but I just want you to know that's an option for more advanced traders. Why is it advanced? Because if it goes wrong, you're going to lose more money. And as a beginner, you may not be prepared for that or understand what's going on. So don't do that. Right? Like if you buy another one, if you bought another one, if it touched the blue and you bought another one and then it turns right around and goes straight to the stop, you're going to be like, this sucks. Look how erratic this candle is. 1 minute it looks horrible. Not even a minute has gone by. It goes from horrible to, wow, this thing's going to the moon. That's a 1 minute chart. So you can't react to it. Okay? Look at that. That looks nice. So here's the thing. I want to make sure my trailing stop is on. Now, my trailing stop, I want to point something out. Look where it started out. Usually the trailing stop starts out somewhere inside of here. But notice how aggressive it is here. The reason why the trailing stop popped up so high, so quickly, in fact, I want to change that. I don't know if it's going to take. I want to put it on strict. Okay. Oh, so Steen, notice, so Steen, I just put strict on. Right, because it was set to low. But now I put strict, and then so this actually, the settings should be the opposite. Strict should be way up here because it's tight. Right? And then low should be very loose or very, very, give the trade room to breathe. So I just switched it. I switched it to strict, and it moved the stop here. Okay, you see that? Okay, is it reversed in the update? Because I know this is now this version here is now an older version, but we haven't pushed the most recent version yet. Okay, so but if you don't, that's why I tell people don't get confused for that. You could just leave it in the middle setting, and that'll put the trailing stop at the regular speed. Okay, cool. So I'm going to leave the trailing stop on this setting here because I want to give the trade a chance to do its thing. All right, I want to give it some room. But now you see you can change the speed of the trailing stop in case if you want to give it more room or you don't want to give it less room. You could make the trailing stop more sensitive or less sensitive. That's a new feature. He just has to make an adjustment to it. Okay, look, this thing's going back to break even. Man, this thing may go back to my trailing stop, which hasn't cut my risk by much yet. But again, this is a 1 minute chart. So this type of behavior should be expected. Now, let's just consider something here. What is my risk and what is my reward? This is my risk right now. All right, which has been cut. So 60,078 is the exit, and I'm in from 137. So what is that, about 50, 60 points? At this point, I'm taking about 60 points of risk. Okay, that's typical. That's actually low for a 1 minute. And my reward, though, 62.67. So I'm looking at like, what, 120 points or something like that? So at this point, this is almost 2-to-1 reward risk. But initially, if I took the full stop, the reward risk would be 1.5 to 1. And that little number is up in here, 1.5, which you could change in the settings panel as well. But if you're a beginner, again, no need to mess with that. That's for more advanced users who want more customization ability. As a beginner, you can leave those settings alone. They're adequate. You just want to get used to the system and go through these steps that I just showed you. So again, let me ask you guys a question. What step am I in? What step am I in? And if I don't know, if you're not sure, you could say, I don't know. What step am I currently in? 5th step, Van says. Correct. Step 5. Yes. So you guys are following. I'm still in my managing the trade mode. I'm still respecting the orders, right? We haven't touched the trailing stop yet. I got banged out of the other trade, right? So I took the stop. Here, I got the trailing stop. I'm respecting it. So at this point, again, there's no thinking. Here are my options. Either I hold it to here, which I shouldn't do because I have a trailing stop, okay? I hold it to here, bang it out there, okay? Or it goes here. Those are my options right now. Another option is it may go beyond the take profit. It may go up here. And what's going to keep me in that? The trailing stop, as the trailing stop continues to follow it. So the trailing stop starts out reducing your risk and helps you maintain and capture more profit while giving you the opportunity to ride a runner. Now, for example, Bitcoin had that move from 60K, whatever, a few days ago, and ran to like the high was 63,790 something, right? For all the people that were in that trade and had not trailed it or whatever, they gave back all their profit. But if you had a trailing stop or some way to recognize that you need to get out of this thing, you would have kept at least a good portion of your profit, if anything, break even, because the market gave the whole move back, right? And that comes out of nowhere. The question you have to ask is, how many people, when it was pushing 63, whatever, how many people were going nuts saying that this is it, this is the move to the moon, blah, blah, blah. I hope you stop listening to those people. Okay, here, we're going to go to the trailing stop. Look, that's what's going to happen. I have to get out if that's the case. So look, the market's not cooperating, and there's going to be times like that. You may take 2 or 3 losing trades in a row before the winner comes along. What helps you win over time, see, I got to bang this out now. That's it. Okay, so I don't have any nice examples here today because the market just doesn't want to cooperate. That's the market. That's a second stop out I had to take. Of course, the risk on that one was a little bit less because I respected the trailing stop. It wasn't the full stop. Now, over time, over 1,000 trades, if you respect the orders like that, what will happen is because you're reducing your risk over time and your profits, the take profit stays the same, or you may capture more if the trailing stop runs, you're going to win more over time when you win compared to when you lose. So you will have a positive reward risk over time. And that's what leads to growing your account. Not, oh, I took 2 stops out, 2 stops, this thing sucks. If that's you, you're in the wrong game, because this is typical of any system. Systems have more than one stop out. That happens. Okay. We tried with our level, we tried this, we tried that. Sometimes the market just doesn't cooperate. Right? Like I said earlier, this is a bad time of day to trade, and this is low volume. Now, I'm just curious, if I take counter trend off, was there a trade there? So I got no signal here on this time frame. There's nothing there. I'm just wondering, like, how could I have taken advantage of that? Probably I would have to be like on a 15-second chart. Let's see. See, look, the 15-second chart gave me a signal, but those are going to look great only after the fact. I don't want to sit there and try to be reacting to those. I want to be prepared for those if I'm going to try to take those. Okay? Like that's the nature of the game. So back to my 1 minute. My 1 minute never gave me the signal here. I had to go to a smaller time frame. So don't be confused by that. Stick to your original plan. Right? So we're still trying to look for longs here. This may turn into a double bottom. We're getting the warning. And if that turns into a double bottom, I mean, technically, that's something I'd be very interested in. What time is it? Okay, I'll go a little bit longer. Let's see if we get the double bottom, because I like to show these examples. Okay, because this is the type of environment you're going to face. Now, so far, I've taken early trades on both of these. They haven't worked. I'm going to try it again here. I'm going to buy one early. Now, keep in mind, when I do that, like I said, you shouldn't do it unless you understand what can go wrong. This is potentially a double bottom, and we're in a location that's very attractive. This location hasn't changed, you realize. Even with all this selling activity going on here, this location in general is still intact. It's still intact. It may be in the process of breaking, but if it keeps bouncing around in this general area, like bounces like this, that they attempt to bounce, but then they give it back, these can be very telling because it means someone bought something. Maybe it was short covering, but there's some kind of action that's happening here. Even though it gives it back, it doesn't necessarily mean that it's canceled out. It's a clue. Ah, look, I got the signal. I'm going to try it again. There's our third signal. I'm going to put on 2 contracts. I bought 1, so I have a total of 3. Again, so notice, right? This up here was a stop out. This one stopped out up here. Okay, that stopped out. This one stopped out. Hopefully this one doesn't stop out. But I want you to see the obstacles of a 1-minute chart. This is what you deal with. Well, it's a lower low. Yeah, it's a lower low, but barely though. Look, I mean, this low is not really much lower than this. Not really. This, look, we're dealing with 1 minute. This doesn't really mean anything. Now, if you're saying lower low relative to this low, yes, it's a lower low. It's definitely a lower low. But the thing is, we're still at the general level, though. That's what you see. You're getting caught up on too small details that are too small. This is why we use the 1 hour to arrive at context. The 1 hour told us that this general area is a general area of support. So even though I'm getting lower lows, I don't want to be blind to the fact that this is generally a supportive area. Even if I get stopped out 3 or 4 times, it's still a supportive area. In order for this to no longer be a support, we got to clear the entire area. So basically, we need to take out this low, this one. We need to do something like that to really prove it, okay? So it's very important. It may be counterintuitive. It may be hard to understand. You'd be like, wow, you're fighting the market. No, I'm not. I'm sticking to my plan on the bigger picture, which I know over time carries weight. Yeah, the market may be a pain right now. It's not working. It's not cooperating. I keep trying. It keeps stopping out. But, that's the random nature of the market. If I switch now, I switch my thinking. But this thing's a short. I'm going to just turn around and short this thing and I'll be making money. What's going to happen? Maybe not this one time, but what's going to happen is I'm going to short the absolute bottom. Okay. This is when I'm going to short it right here. Okay. And then this is what it's going to do to me because I was not sticking to my plan. So you have to see, I got stopped out again, man. All right. The market's being very tough today. Let me bang it out. Okay. Is it 4 o'clock? No, not yet. This is just random price action. Look at the tail developing. But I have to respect the stops. And I tried 3 times. Every single one of these was a stop out in a location where we should be getting some bullish follow through. So I'm not going to take another one. But my point is this. Just because we're getting this reaction now, don't change your mind. Okay, look what we're testing. Let's go back to our 1 hour. What's going on our 1 hour? What's going on? Let's take a look. This is a 1 hour. This is what you need to be paying attention to. This, not your 1 minute. You will be blind by the 1 minute. Look at the 1 hour. What's happening here? We're still fooling around the area. Okay, so just like before, when we were going over our step 2, I would still be looking for longs here. I would still be looking for counter trend longs because we're still fooling around the support. I mean, it's messy, but look, that's what this level represents. So there's still a higher probability, even though we're dealing with this 1 minute stuff, there's still a higher probability that over the next few hours, at least, we see at least a test of the range high, something like that, right? That's what I'm trying to capture. So that's why I don't want to change my plan now and start shorting this thing because I'd be asking for big trouble. If I was going to short this thing, I should be looking for shorts up here if I'm going to do it. Okay, at least identify a minor resistance. Don't short into the support area. That's why you have to start, like earlier, you go through these 5 steps and you use that to get you to formulate your plan. And if you get stopped out a few times, go back to your bigger picture and be like, all right, what's going on here? Is this thing really breaking? Look, I mean, look how quickly it recovers. I mean, look at this. We get a nasty red candle and then it pops right back up. Probably over the next signal or two, this thing is going to bounce and I'm going to miss it, right? Because I'm not going to be streaming. Watch, as soon as I turn off the stream, we're going to get the bounce. But my point is, don't react. Stick to your plan. Now, you say, well, at some point you have to admit you're wrong. Yes, that's true. At some point, that point is going to have to be the break of this, at least a solid break of that, meaning we get a candle that looks like this. Okay. We get a candle that looks like that. Okay, I'm wrong. Hopefully, I'm not in it when the candle does that. But at that point, I'm wrong. And there's another support after that. Like if we get a candle, a nasty candle like that, this next location would be the next location to be looking for longs. And you may say, well, but the whole time you could have been shorting it. Well, here's the thing. When it comes to momentum continuation, if we were like dramatically below, like let's say we had a solid candle close, right? This candle, this current candle closes solid red like that. And you want to try for a momentum continuation after a solid red candle, okay, go for it. But you're still shorting in very high risk areas, so you better not expect much. I mean, look at this situation here. Look at the solid red candle, right? But look at the tail on that candle. See this candle here? This could have given you both a reversal, or if you shorted it on trend continuation, momentum continuation, and you shorted it like at the bottom of the move, you got squeezed out of this, even though this thing was going lower. All right, so you have to keep that in mind. It's a tricky game. Look, there's the next signal. Look at that. Oh, just for fun, I'm going to take it. Since it's there, and I'm going to buy all three again, right? No. Of course, this one, my warning would have been the warning to take, but whatever, right? You can't look at the market and take it personally like that. So I'm back in. I'm not in from the best price because I was talking, but let's just see where it goes. I'm just curious. Does this one go to the take profit? Let's find out. Okay, so you guys following me so far? Any questions? You see what I'm doing here? So even though we took a few stop outs, how do you guys feel about that? I'm just curious. When you see those stop outs, is that like, oh, this thing sucks? Is that you? Or you're like, okay, I get it. The market's random. I mean, it's going to happen. I want you to see this, and I'm glad you see this because you're going to go through this. And I want you to understand that you should not be, you should not lose confidence because the market is random. Okay, so let's just see. I'm just curious. Let's see where this thing goes. Let's see if this is the pop that that delivers the winner, even though I had to take 3 losing trades first. And those losing trades, by the way, could have been smaller because each one of those I took the early warning one. I entered early. This was the one that the early entry here would have been the best one, of course, but I missed that one. Okay, so this is also the what you deal with on a 1 minute. Like I said, when you're dealing with like a 30-minute or a 5-minute or something like that, you're not going to see this same frequency. You may get 3 losing trades in a row, but they're going to take a long time to play out. I want at least 95. Wait, and I want to be less than $1. Well, UTXO, the robot, I can tell you that there are plenty of Ferraris for you to be, you can rent as well. When you get your system like that, let me know. I know that made no sense. I was trying to connect that to like the Ferrari idea. Never mind. I should not try to do improv while I'm streaming here. Anyway, so you get the idea. When people ask me about the win rate of the system, I argue that it's 50%. And people get turned off. Wow, 50%, right? UTXO here, he wants a 99% win rate. There's no such thing. 50% means the market is random. In fact, the TradeScanner Pro helps you capitalize on the random nature. And what I mean is, when you have a runner, which can randomly occur, we don't know if it's going to run. Like I said before, this is not a forecasting tool. If we get a runner and it pushes through the take profit and it just keeps going randomly, there's no way to know it's going to do that. But there's a way to capitalize on that with the trailing stop. So it actually capitalizes on the random nature. There's no way to forecast that. So please don't be fooled by these forecasting people that tell you that they have some kind of accurate way to tell the future. They're lying to you. There's no such thing. Now, before I wrap this up, I want to mention something. I get this question a lot, and you guys, I know I've answered it before, but I want to answer it again. You'll notice up in this area here, in the panel up here, you'll notice sometimes a word will pop up that says conflict. And some people don't know what that means. Conflict means that when you have a trend, like trend is bearish, but the price action is going against that bearish momentum for a prolonged period of time. That's what conflict is. So like, for example, if this was bullish, right? Usually you get conflict before the trend change. So it's sort of a heads up for trend change. You may get a trend change if the conflict lingers for too long. So for example, let's say the trend was bullish, right? Up here it was bullish, bullish, bullish. And then you got this price action here. Most likely at the time, in fact, let's see if I get it by doing the replay. The trend was bullish at the time. See that? Look at the trend label. Now, as I advance this, you see it? It was there. Why? It went away. Watch. It'll come back. See it? It says conflict. See that? Conflict warns us that the trend on this time frame may be in process of changing. That's what that means. So it's like a heads up for trend. That's what that is. Okay. So just so you guys know, does it really help you make trades? Not particularly, but it kind of lets you know, like if you're getting signals and you're going against the conflict, just understand that the trend may be in process of changing. That's the whole purpose of that. Like, for example, right, our trend is bearish right now, but if we get a sharp move upward, we get something like this, right? And I'm thinking about shorting, I'm likely to see conflict here because the trend may be changing again soon on this time frame. 1 minute charts, trends change all the time very quickly because it's a small time frame. Here's my trailing stop, just appeared. All right, I mean, this trade is not going anywhere. So I don't know if this is going to go anywhere or not. Again, it's up to the market. It's random. How much time we got? All right, a couple more minutes. We'll see how it goes in a few minutes, and I'll just close this thing out. All right, but you guys see where it's at. Any questions? So if you guys want to try out the Trade Scanner Pro for free for 14 days, click the link in the description. In fact, I don't have to type it here. You guys know where it is. It's in the description, and it'll take you to my website. It'll take you to this page, right? You scroll to the bottom, right? You scroll here, and you fill out the form. Okay, you just go here, you fill out the form, and you can start your 14-day free trial. And just make sure if you don't like it for whatever reason, you can cancel it. Now, again, the whole point of this stream was so that you can use it effectively and you can see some positive results, or at least increase the chances of positive results. Man, this thing sucks. All right, I'm just going to blow this out. Well, maybe not. Let me give it a chance. Let me not react. These are 1 minutes. Okay, so again, you have 14 days. I want you to see a positive result, but not just randomly. I want you to see a positive result that you can repeat. You're going to have stop outs. Look, I mean, I'm in my 4th stop out over here. It's going to happen. So you need to see this. But if you know what to look for and you see like a situation like this, if you're taking like 3 stop outs, you probably shouldn't go for the 4th one like this. You should just give it a break. It's not working. If you take the 4th one, again, this thing's stopping out again. That's the nature of a 1 minute. That's what you're going to deal with. Okay. Now, in this situation, if this does not stop out for whatever reason, if this manages to hold, because I'm going to try not to react to the candle. I'll let the candle stop me out. Again, I'm trying to respect the orders here. If it goes through the blue line again, the entry, that's an opportunity to add. That's advanced. But maybe I'll try it here if it gives me the chance here. So again, just to recap, step 1, as we know, is you choose day trade or swing trade. You know that before you even look at your chart. Step 2, you're doing context. You uncover the context. So you have a larger time frame and a smaller time frame. Based on your choice from the first step, you're going to decide what those time frames are. It could be a 1 minute, 1 hour, like I have here. It could be a 15-minute, 4 hour, it could be a 1 hour, 4 hour, it could be a 4 hour daily. That's going to depend on you. To keep it simple, if you're new and you want to be a day trader, consider 1 hour and 1 minute, or 1 hour and 5 minutes. Actually, yeah, something like that. Or maybe 1 hour and 15 minutes. Okay. If you're brand new, 1 hour and 15 minutes. Swing trader, 4 hour daily. That's it. Step 2, right? You uncover your levels, you know your trend. Step 3, you decide trend or counter trend mode. You set your mode. Step 4, you wait for the signal. Once you take the signal, step 5, you respect the orders. And it's up to the market at that point. Like right now, again, I'm in step 5. I'm respecting the orders. Either the market taps me out again, or it starts to do something favorable. So now I want to mention something. Remember, I originally got long up here. If I had just stayed in that trade and be like, yeah, it'll come back, I'm put all of this going against me. That's enormous risk I'm taking. So that's why you have to respect the stops, especially on a 1 minute. Because like, for example, what if we were at 63.7, okay, and we're getting all these long signals on a 1 minute at 63,750. And we're like, yeah, this thing is strong. Plus my fake guru just told me this thing's going to 80K. I'm going to hold on. And it goes right back to 60K. And now you're exposed to 3,000 points of loss. And you're stuck in the position. You don't want to be in that. And that will happen. That's why you have to, no matter what, you have to respect these orders. Especially like the stop. Like it stops out, just get out. Take the loss, turn the computer off. You're better off that way than, I'm better off losing $300 than losing $3,000. Okay. I could make $300 back pretty easily. $3,000 takes a lot of time. So, and that's not fun to lose. Trust me. All right. So again, up to the market, either going to tap me out or you're going to turn green and go back up here to the entry price. And I think the market's going to tap me out. So let's see here. Okay, I got my order. I'll just bang it out as soon as it goes there. When the order vanishes, when the suggestions vanish, the trade is closed. So once it vanishes, I bang it out. That's it. Right? And that's what you should be doing. That's how you respect it. Some people, they send me a message. How come the orders vanish? How come they vanish? It's because either your stop loss was touched, your trailing stop was touched, or if you don't have the trailing stop on, if it touches your take profit, the order suggestions will also vanish. Okay? These are visual orders that help you manage your decisions. That is all they are. And as you get good, as you get more familiar, then you know how to navigate around these orders, like I'm showing you right now. If I get a blow through this blue line here again, the entry price, I'll take that as an opportunity to add. But that's not something that's in the instructions. That's something that comes with time. I don't expect you to know that or to do that as a beginner. But if you want to fool around with that and paper trade, go by all means, paper trade. Nothing wrong with that. All right, here we go. I never got stopped out. But again, these are 1 minutes and they're unreliable. So just because this candle looks good doesn't mean it's going to turn out good. So don't have feelings. Don't take it personal. The market's going to do what it wants to do. It has nothing to do with you now. We've made our decisions. We've done our thinking. We're just trying to take signals at a level where we're anticipating a bounce. The bounce doesn't want to happen right now. It doesn't want to happen. But I'll tell you, when it happens, usually what happens at that point is you're so convinced it's a short that you're now stuck on the wrong side. Because it's human nature to believe that this is just going to keep going and going and going and going and going. But usually when it looks that obvious, it's usually done. That happens over and over again on every time frame. Okay, see what I mean? Like it doesn't want to go anywhere. Also, I have to point out, we're right on top of a holiday here. Today is July 3rd. Tomorrow is the 4th. In this country, I mean, people are off today. So we're involved in a really bad time. Holidays are usually not good days to trade. The market closed early today. The stock market closed early. So that's usually, when you have like that lack of volume, typically follow through and stuff like that just doesn't happen. So it's best to usually take the time off. Just letting you know. I would like to show you a positive example, but the market just doesn't want to cooperate. So I have to bang it out. Like I said, it happens. Okay, I'm not taking any more trades after that. So any questions, you guys? Any questions so far? All right, so I reviewed the 5 steps. You guys should know, and I'll do this again. Perhaps maybe the next student meeting, I'll do the 5 steps again, or something like that to make sure people understand it. But with these 5 steps, you should be much better prepared to isolate higher probability signals and know in advance, having a purpose. You're looking for a long at a support or a short at a resistance, or you're looking for continuation patterns. Like to kind of give you an idea, if we were fooling around in the middle here, I would probably be looking for continuation patterns more likely than looking for reversals, or looking for them here. Continuation patterns here are risky. They could work. Obviously, some of these things worked here on the other side, but they're much riskier. And over time, that's what matters. Okay, cool. I have more of an idea of how to use a Trade Scanner Pro. Okay, cool, Monica. All right, so again, it takes some time. So I hope new people, again, just step by step. Each time you just follow the steps and you should see an improvement, because you're going to reduce. You're going to be taking less trades. That's the idea. And you're going to isolate trades that you're anticipating a certain type of thing, and you're using the trade scanner to confirm that idea. That is the whole point. Okay, cool. So I don't see any other questions. If you guys want to reach out to me, you could send me a question in the community, in Discord. You could send me an email. You could send me a question on TradingView. I typically can answer those relatively quickly. Just keep in mind, if I reach out to you first, and especially if I ask you for money, it's not me. So please don't be fooled by these frauds, these imposters, these identity thieves, because they're trying to rob you and they're trying to take advantage of my good reputation. I would never ask you for money. The only place I ask you for money is on my website to sign up for the Trade Scanner Pro, and you have 14 days before you pay. So you're not paying me anything up front. All right. So if I ask you for money, oh yeah, give me $1,000 and all that, that's not me. Please don't be fooled, because it really bothers me when I find out that people have been robbed from fake me's. And also, so block them and report them in the fraud channel. We have a fraud channel in Discord, so that other people are also aware of frauds. All right, so I'll leave you guys with that. Again, if you're in the US, I hope you enjoy your holiday. If you're outside the US, I don't know if you're enjoying the holiday either, because it's really not your holiday, but I hope you're enjoying summer. And I will see you guys next time. Keep in mind, I stream normally on Mondays. Okay, so you guys can go back, watch the stream again, go through the 5 steps, and hey, come to the community and let me know how you do. All right, so enjoy the rest of your day, the rest of your evening, wherever you are in the world. And hold on. Thank you again for watching.